I'm joined with Frederick Bell from Elemental Altus Royalties. Frederick, thanks for joining us.
Thank you very much for having me.
So here we are at the Beaver Creek Precious Metals Summit, and one of the things that I've been asking the guests that we've been having on is when you chat with other people at this conference, and I'm sure you're talking about all sorts of stuff, what's the buzz, what's the sentiment like?
It's an interesting topical question. I think one of the really things that's probably been persistent in the feedback so far is the difference between where the commodity prices have moved, and if you take gold sort of up 20% this year, and the fact that you've seen some of that reflected in the mid-tiers and the majors, but really not yet into the junior space. Now, it's not the first time that's happened, but what it tends to lead to, if it doesn't correct itself, if the juniors don't catch on, is it tends to lead to more M&A. Because the bigger companies are looking down and saying the same company is there, but effectively cheaper at this commodity price. And I think not necessarily in the junior space yet, but in the mid-tiers and the majors in the last sort of month or two, we've probably seen now 4 big transactions announced, 3 or 4 big transactions. So it might be the case it's starting to pick up, but there definitely feels like there has been a disconnect between the valuations of the smaller companies and where the market's commodity prices are at.
So let's talk about Elemental. What's the high-level overview of the company?
Look, we're about a 160 million US market cap company. We have this year, I think, 20 to 23 million US dollars of revenue. This will be our, I believe, 7th year of record revenue since we started the company. We started privately, we listed in 2020, and every year since we have increased our revenue. This year should be a record. We're expecting next year to be another record. And what that really means is that we are starting to be increasingly cash flow positive. So as a royalty company, we don't operate any assets. We get top line exposure to the commodities that we're exposed to, in this case, gold and copper. And if we get 1% of production at a mine, every 100 gold bars they make, we get paid 1. And so we can have a very lean team. We have exposure to currently 11 producing mines around the world. I think at 10 different operating companies. So we're more diversified than the mid-tiers or even some of the majors. For a company our size, we have positive cash flow. We've spent $13 million this year, 5 million in Q1, 5 million in Q2, paying down debt that we'd drawn. We had an acquisition in Q3 that we spent 3 million on. We still have 7 million in the bank. We're generating cash flow, so we can continue to do that organically. We haven't had to do an external fundraise now for over 18 months. So we've got to an inflection point in the company where actually we can, unlike a lot of junior mining exploration companies, we can actually use our revenue to start growing the company and reinvesting in new opportunities.
So you haven't raised money in 18 months, but you're here at the Precious Metals Summit. Are you guys looking at raising money at any point?
Look, a lot of it is talking to existing shareholders and talking to potential new investors. And even if you're not actively raising money, in terms of trading and liquidity and making people sure people are understand and aware of the story, it's really important. Such a good conference for our space in the mining sector. And the other side of it is also as well, we're incredibly opportunistic. When we started the company, our first transaction was under $1 million. We've scaled it up ever since to 5 million, 10 million, 30 million, $50 million transactions. So we do want to be in a position where when we see really compelling opportunities that can actually really add value to the company, we're in a position where we have investors we can go to who know the story, who are familiar with where we're at, who understand the company, and we can raise the money if need be alongside our own revenue and credit facilities to take advantage of those. So always trying to keep the market and investors aware of what we're doing.
So when you guys are out there looking for royalties, what's the sweet spot? What is it you guys are finding that you think is sort of the royalty where you guys can compete and have a strategic edge?
It's a very good question. The largest part of our portfolio is actually in Australia. So a lot of the management team are in London and 2 of our team are in Australia. So we've done quite a lot of transactions in Australia historically. But I think for us, the sweet spot is, you could call it the $2 to $20 million space.
Okay.
Where it's transactions that are, can be meaningful for us, but probably aren't as big that move the needle for the larger royalty and streaming companies, the major multi-billion-dollar companies. So those, I think right now is probably really where we're focused. One differentiating factor for us has always been that we've had cash flow and producing royalties from day one. So we have made that a core tenet of the company. And what that means is that in terms of opportunities, we can actually take advantage of opportunities that other companies our size couldn't. because we have revenue. We have credit facilities that we can use for that, and we can use our equity, as currency as well.
So, Frederick, if I am an investor in the company, or I have you guys on my watch list, what am I looking out for over the next year?
So look, we had one material royalty coming on stream this year at Bonacro. That started paying us from Q4 last year. We have just in the last week had an announcement that our next major producing royalty, they have agreed the permitting for it. So it's an existing mine, and we have a satellite deposit, and that should be coming into production this month. So from Q4, it should really start to be producing, and that will add another, call it $3 million order of magnitude of revenue a year going forwards to the company. We don't have to pay anything for it. We don't operate anything. It's just additional revenue. And then in 2026, our second largest royalty is going through a potential 50% throughput expansion. So that will be giving a lot of organic growth. So for shareholders and company, this year will be a record in terms of revenue. Even if we did nothing else, next year we're going to have some material organic growth, and the year after we should have some material organic growth. And that has never been a position that we have been fortunate enough to be in so far. But as we've grown the company, we've got a bigger portfolio, more revenue, more opportunities. So I think that growth that we have at our size is really important.
Yeah, well, Frederick, thanks for sitting down here and joining us for this interview, and hopefully you'll still take the time to chat with us when Elemental is the size of Franco, Nevada.
Yeah, thank you very much.